Strategic media and public relations is bringing together dynamic companies, investors, and consumers like no one before. And we're doing it in a unique way while addressing the big changes underway in our world. Our world is fraught with both peril and opportunity. The world is changing. Long-term conflicts are shaping up over commodities, currencies, and influence. Political lines are shifting. Yet mankind moves on to meet the needs of a growing world. Newer, cleaner energy, medical breakthroughs, ways to better our lives, better ways to move into the future. Join us now for today's topic.
Hi, I am Konni Harrison with Strategic Media and Public Relations, and Chris and I are here to have another fabulous conversation about what's really going on out there in the world. Chris, you sent out a newsletter because you're the national investor where you get knowledge, not just information. And it talks about a couple pretty scary things that are happening out there right now with companies that are trying to get some traction, trying to get some new audiences, trying to, and from our experience in our past, we're used to seeing people doing the same thing over and over and over again and expecting different results, which doesn't particularly work well on a variety of fronts. But in the National Investor, you talk about stagflation and what that means for companies and how they're going to be struggling to gain traction in 2024 in this current environment. I mean, forget about the election year, but in this current environment in 2024. Can you touch on the stagflation piece of the letter?
Well, we'll talk about stagflation in a minute, but even prior to that, Connie, one of the things that we do, of course, is we try and help give out-of-the-box ways and untried ways in some instances for public companies, for private companies, for people with a cause that are trying to get some traction. Show them, okay, it's 2024. This is how it worked in 1970s, 80s, 90s, aughts, and so forth. But it doesn't really work this way today because of all these different changes. And we try and educate people on that. By and large, what you had, and we're focusing now on public companies that are trying to get attention, trying to get press, trying to get new shareholders, trying to keep existing shareholders on board and so forth. There was this notion at the end of 2023 that what was an abysmal year for almost all of these types of companies. I mean, biotech got annihilated. Junior resource stocks got annihilated. Most other small cap stocks got annihilated. And with precious few exceptions, it had nothing to do or very little to do with how well the company was doing, any accomplishments or whatnot. There were happily some exceptions, but I'm speaking in general terms that nobody got any traction. And there was this idea that I heard expressed to me numerous times that, when we would talk about how to get their wares better known, what they're going to do as far as publicity and their messaging and so forth. And many times, people said, you know what, the heck with it, 2023 is a loss. When 2024 starts and tax selling season is over and so forth, we'll be in a better place. Well, you know what? We've just logged our first month. We're now in February after the first month of the year. And despite the major indices hitting new highs in the recent past, the S&P 500, the NASDAQ 100, the Dow Jones Industrials, things have not materially changed for the small cap resource stocks, for small cap stocks generally. A little bit of murmurings of activity with biotechs because there's been some deal making recently. And as with resource stocks of most kinds, people in the know realize that this is a time to be buying assets, sometimes to be buying companies wholesale. But by and large, this has not proven to be just this automatic flip the switch and everybody's beating a path to your door kind of thing. So what I've been trying to help people to understand, and by people I mean executives and IR people, marketing people with public companies trying to get themselves better known, is that first off, the environment has not materially changed for those most active investors in the markets. They want the big cap tech stocks, what you would call them Magnificent Seven or whatever. They're not interested in going down the food chain and looking for companies. That's going to change. There's a lot of reasons why it will change, but that change is a bit farther off than a lot of people want to admit. So there's a void right now. Okay, how do we tell our story at a time when investors still need to be spoon-fed these things? We're not beating a path to our door. We need to figure out how to get through theirs.
Absolutely. Absolutely. And now correct me if I'm wrong, but throughout when I was a toddler and my father was in the markets, of course, isn't the objective to buy low and sell high? So wouldn't you think that people would be coming in if you have that good story? I mean, is it, and I think to your point, maybe there's some companies out there thinking, well, it's a slam dunk. We don't have to do anything different because buy low, sell high. We've been beat up. So now people are going to come flooding in. But isn't the key here to get new eyeballs and new attention and engage that new paradigm, to get people to lean in to you, to make your board of directors happy, make your investors happy, get more investors in, get your team excited. I mean, isn't that part of it?
Well, it is, Connie, but first off, regrettably so, and this is long predates any of us. Investors, though they should buy low and sell high, usually do the opposite, okay, in a broad sense. The masses follow the masses. I mean, there are exceptions. There are people, Joe Kennedy famously made his fortune on Wall Street during the great crash and the depression of the 1930s because he had sense enough to have not followed everybody into over the cliff and was shorting the market. People will be doing that again one of these days. There are others who, you buy when blood is in the streets. John Templeton, the late Sir John Templeton, had a couple of great quotes about that. So that is how sensible, wise individual investors and institutional investors alike do things. And I can tell you from a lot of companies that I've talked with recently, some of them I've interviewed on our National Investor YouTube channel. Part of the reason why there's some stories right now that I think are really cool is that at least in the cases of the companies themselves, they're buying really cheap assets right now. And they're going to be rewarded for that down the road. Investors will be later to catch on. Look at one of our client companies, Guanajuato Silver. If you haven't looked at that video, folks, watch that. There's a story of a company that has been built from nothing into a really solid company, buying assets pennies on a dollar because they knew what they were doing. So individual investors are not always as smart to do that. They follow the crowd. I've got a couple of cartoons I've used. In fact, I'll put them on the screen here right now. If we look just at the area of battery metals and the energy transition and so forth, as we're talking, there's already been monstrous moves in uranium stocks. People who got in there early and did so, were smart enough to do that, have already got several times their money on most of the better uranium plays that they can buy. Lithium has been feast and famine. I mean, I've got a couple of, I got one 10 bagger plus, and I got a 20 bagger on my list. But the residue of those companies that we have, they're selling for 20 or 30 cents on the dollar from their peak because you got these big spikes and then crashes in lithium, which will come back. As we talked about on our EV video recently, you and I. But by and large, what's going to happen, like these cartoons I've got here, is that right now everybody, and the old saw is, if you want to know what's really nuts price wise on the upside, what's a bubble, what's unsustainable, it's when your shoe shine boy, the guy at the grocery store, the bartender behind the bar, the taxi driver can't wait to tell you, oh, I got to tell you about what I just bought in the market. Well, if he's telling you just bought something, sell it. Okay.
Yeah.
So everybody's all about AI stocks. Everybody's all about these meme stocks that are out. Several years from now, and there's a lot of policy changes and whatnot that need to be made for the energy transition because, the EV industry, as we talked about, is going through some major growing pains and upheavals right now. It won't last forever, but it's here for a little while, unfortunately. But when that all gets straightened out, when people catch on to the whole story of the massive electrification of the world, not just of transportation, but of a lot of countries in Africa, in Southeast Asia, that they want to be able to do like we do and go in and turn on a light switch. Okay, a lot of them can't do, probably a couple or 3 billion people can't do that right now. We're going to be able to do that and do a lot more. So once those things are really out of the bag, those cats are really out of the bag, several years from now, when you get into a cab, your cab driver is going to be telling you about the uranium stocks he bought, the lithium stocks he bought, the copper stocks that he bought, the gold and silver stocks that he bought. And that'll probably be a time to sell when we get to that. But we got several years in between where in those areas, to one extent or another, there's great opportunity. But no, the problem is that the masses still want the meme stocks. They still want the AI stocks. And so for people with those kind of products and minerals and metals, for people with good stories of any kind that are small cap stocks that are off the radar, this is what you're dealing with. You're dealing with the public, and especially because of a lot of other societal changes and things. You know, you got to get to them on their turf and in ways that they're going to respond to. And most people have not figured out the ways to do that yet.
Well, there's a lot of fear out there. I was having a conversation with somebody who's very big in the energy game not too terribly long ago. And he said that the fear is allowing somebody else to talk about your company or your product. And, they don't want a third party to come in because they may say the wrong thing. Whereas in our case, we're working with companies to make them relevant, to get them attention to the masses who may not understand, because again, to carry the national investor theme, we're all about knowledge, not just information. But there's a lot of people that don't want all of that knowledge. They want to go, okay, just tell me what to do and I'm going to do it, and then they're mad in the long run. So let's get people unmad and, get these companies out there that really make a difference. And it can make a difference in people's hearts, in their heads, in their wallets. There's ways to go about it. And
well, and
good
again,
at it.
when people are armed with knowledge, and when they have cool heads, when they don't get caught up in hype and emotion and so forth, you can start to look at the landscape in front of you and say, okay, here's what we've got in front of us. You work on probabilities. When you look at all the different data that's out there, what is the broad economy going to do? What are interest rates likely to do? What is the consumer likely to do? How is that going to affect investor behavior? How is that going to affect my company if I'm a CEO of a company that has got a nice new invention or a prospective silver project or whatever the case may be? How do I get my head around all of these things, and how do I use this information to appeal to people? And especially when you're talking about small cap resource stocks, it has been a very insular market and subset of the investment communities for years.
Mm-hmm.
And people outside of those companies don't really understand the big picture, nor do they want to. They sell themes and sometimes gimmicks to investors who are already part of the converted. And as I tell people, just to use this one example of many I could right now, Connie, from time to time, you see generalist investors all of a sudden wake up. I gotta buy gold. The Fed is doing this, the news is this, the deficit is this, and so forth. Maybe it is time to follow those tinfoil hat wearing people and buy some gold. Okay, when that happens, gold can go parabolic, and there are a few different times you can look at over the years when it has. The most notable one, for example, was in the immediate wake of the global financial crisis in 2008. Gold at first went down with everything else, but then in under 3 years, it tripled in price. Silver was up almost fivefold at the same time from its bottom. And that was not because gold bugs, who already wear the tinfoil hats, so to speak, that's not because they were buying, it's because a lot of other people were buying. And that is one of the markets right now that is very intriguing, because when you look at I've got a special issue out of the National Investor in the coming few days on this very subject. When you look at the gold demand in the world, individuals, especially in the East, India, China, and elsewhere, buying it with both hands. Central banks buying it with both hands. Western investors don't care. Okay. And what's interesting is that the gold price has been able recently to reach a new all-time nominal high without investment demand from the West. Okay. When the light bulb goes off over people's heads, we're going to have another parabolic move, I believe, in the gold price in the coming year or two. And the question is now for those companies whose share prices are languishing. The gold price is at an all-time high. Gold stocks as a group, the good ones are half of what they were at that 2011 peak. The juniors are 10 cents or less on a dollar, some of them, and not all bad companies.
Right.
So if you're in that boat, folks, with one of these types of companies, what do you do now to get yourself in front of them? If you're going to deal with people or hire people who are going to tell you, oh, you got to buy gold because next week China's going to unveil a new gold-backed BRICS currency and people are going to dump the dollar, people are going to think you're nuts and run away from you, as they should.
Right.
Because the truth is,
there's that.
Because the truth is, which is a story for another day, people with half a brain can't get money out of China fast enough.
Right.
And that's a terrible thing we're going to finish up with here in a few minutes that also is going to affect all of you listening to this out there. The Lehman moment that was just unveiled in China on Monday, January 29th. But we'll get to that.
Okay. So the other thing that I'm hearing is that based on the division of what's happening, what's understood, what's in the media, all of these different moving pieces. The other thing that I think that strategic media brings to the table is we connect the dots for companies so it makes sense instead of the panic, flood that people do on a regular basis. If we take the time to connect the dots for these companies so they can really make a difference, and it's not just a difference, it's that solid difference, right? It's that foundation difference that, that we bring to the table, because, you and I are obviously different personality traits, although we complement each other fabulously.
Yep.
There's those pieces of it that, differentiate us from the rest of the crowd, because it's the relationships, I love your phrases that you toss out there every once in a while. A lot of people do the pump and dump and the spray and pray. And I go, oh God, don't lose those, but they're real, and it makes sense. Just like, following the masses and, buying what everybody else is buying. That's,
Well,
but
let me interject something, Connie, while the thought's still in my pea brain before it oozes out one of my ears here. There is a dearth of rational thought in this country right now, but some of it is coming back. All right. You've got the polls leading up to the presidential election. The average American, if you had to cobble together one person, from all the different polls and views and stuff, would say wherever the guy or gal who is labeled none of the above, that's who I want to vote for.
Right.
Okay. So you got the two presumptive major party nominees who have both got high negatives. You've got people on the outside wanting to get in. They're not allowed into the party. The party, I mean, not the Democratic Republican parties, but the establishment party that's going to tell you who can run and who can't for office. So a lot of people don't like that. A lot of people see the problems we have in the country. They want answers, and they don't want the standard hat scripted stuff, whether it's the Democrat / left side from MSNBC or the Republican / right stuff from Fox News. Okay. Give me something that I can understand and get my head around. I don't need sales pitches. I don't need political talking points. I need facts. I need some, all I care about, this is what my grocery bill is. This is what my healthcare costs are. This is what my house cost me to buy. This is what it costs to send my kids to college, et cetera, et cetera, et cetera. Let's do something about it. Here's what I'm worried about in my life. Okay. And too much, we have companies that put themselves in the hands of these spinmeisters who are trying to be too sensational. And look, I got an edge, believe me, sometimes
I know you do. I know. That's why I
right?
chuckled.
And I can be caustic, I can be sarcastic, but if it's dealing with truth and facts and things that will resonate with people, I do it. It's not, these aren't pre-scripted talking points. So I think that for a lot of companies that are trying to figure out how to get themselves noticed out there, forget what you think. And look, I've had to do this myself. Sometimes I'll be writing something I'm strongly opinionated about and I'm talking past people because I'm talking about what I know or think, but maybe not what relates to them. And I got to catch myself once in a while. Well, we all have to do that. And we've got to figure out, if you're a company in an extractive industry, okay, how do you make what you're doing relevant to Joe Sixpack and Sally Sockermom sitting in their room that they got a 401k, maybe they've got a brokerage account, and every now and then an uncle gives them a tip or they read one online, but they got some money to invest and they're trying to make sense of this dopey world too, and figure out what things that they can put money in for their kids for the future. Talk to them. Okay. And about just themes. I had a conversation the other day with a base metals mining company and said basically that, look, people don't care what your minutia of information is. You got such and such an assay result. You got over this kind of true width, and this is the metallurgy, and this is that. They want to know, is it made in the US? Is it in a safe jurisdiction? Is it going to get us away from Chinese and Russian imports? Okay. Start addressing some of those questions. Address the questions about how we can do these things better and safer in our own backyard. One of our causes that you see on our website is an organization called Better in Our Backyard for obvious reasons when you check them out. All right. So I think that for those kind of stories, you're going to resonate with people in what is still going to be a very challenging environment for some time to come, for resource stocks especially. Gold will do best near term, in my opinion. Silver will get dragged along with it. Uranium is still in a bullish phase. Old energy, I like at these levels, but a lot of other stuff because of worries about a recession, worries about China, as I alluded to a minute ago, and we'll get back to. You're still on the back foot. You've still got a lot of headwinds that you got to figure out how to get through if you're not going to keep, for example, your share price, which has already been cut in half from its high, maybe get cut by another half before we get to better days. What is that going to do if you need to raise money? What is that going to do when people look up what you're doing and see such a horrid chart, et cetera?
Yeah.
And look, this has happened to good companies. It's happened to good companies that I have recommended and am invested in. So this is not an isolated problem. It's part of the just upside down world we're in which nonsense oftentimes gets attention and nosebleed valuations on Wall Street, and stuff that's real doesn't. And at a time when we arguably should be, and I think in a couple of ways have started with uranium, with old energy and some other things, a secular bull market for commodities, which we're going to have for the rest of our lifetimes, for a host of reasons that we'll cover someday on another one of these reality checks. But for now, it's a tough landscape.
Absolutely. Absolutely. And, and everybody knows this, even though they hide from it, but, with every big challenge comes what? All together class opportunity, right? But we don't want to date, it's not. The other thing that was called onto my attention was, everybody's afraid to do anything, to make a move anywhere. But, to do something different is taking away a little bit of that fear because you're curious now, right? Let's, what does this mean? What does this look like? So you get the curiosity to start and get rid of the fear with all of this stuff. And, people are going to start to feel better. I've never been one in, that's all about, if you put your foot out the door, it's going to get bitten off by an alligator and you live in Minnesota. seriously, come on. It's just, there's some really crazy stuff out there. And for us to make sense of it and make it real on the macro and micro level for companies, for industries, for causes, it's a lot of fun and it's very productive and there's results.
Well, necessity is the mother of invention, as the old saying goes. And the reason why we put together this company going on a year ago already, it's hard to believe we were starting to put the initial pieces together that long ago, is because of exactly that. Necessity dictates that in today's age, you cannot do marketing like you used to do. You cannot do public relations, media relations, investor relations, any of these kind of things like you used to do. There's got to be a different way to go about it because the old ways clearly for just about everybody are not working. And you talked about people sitting on their hands earlier, and this is another challenge that small cap companies of all kinds have right now. And again, it's not that it's all doom and gloom. It's not that if you put out some great news that maybe there might finally be some traction, but we're about to move, and I think before this year is over, from an environment where those active investors who are out there all want the Magnificent Seven, the big cap tech, the AI stocks, the big cap of everything, and don't really care about being actual investors and looking down the food chain. So at least there's that much positive emotion right now toward equities if it's that big thing. To now we're going to go into a place where recession fears are growing. The Fed is probably, as we found out yesterday, not going to lower interest rates anytime real soon. That's going to keep a lid on small caps and on resource stocks. Again, generally speaking, there will be exceptions. And then we're going to get to a point where there's more angst as a recession starts to become more apparent and things aren't looking good. We've had horrid corporate earnings reports. All you need to do is look at the report from UPS this week. You want to know how healthy the economy really is? Don't listen to Joe Biden, listen to UPS. Okay. So that's a shot across the bow for people who are still Pollyannas and still too bullish out there and think that this is going to be easy money to be made just by chasing the big cap ETFs and things like that. So there's not going to be an in-between. We're going to go from the current environment to where people are going to be more skittish and not want anything to do with anything.
Mm-hmm.
And if that's the case, and we start to see some whiffs of deflation in the markets and so forth, that's going to make it even harder for you. If you have a story stock of any kind, resources or otherwise, to get yourself known. In the few minutes that we have left, I really need, and we're gonna come back to this inevitably, but on Monday the 29th, this past Monday, as we're recording this, a judge in Hong Kong said, and this is a direct quote, "Enough is enough," and ordered the official liquidation of Evergrande. So unofficially, for over 2 years now, Chinese authorities in one way or another have been trying to pull off what they termed a marketized default of the biggest and most highly leveraged real estate concern ever on planet Earth. All right. And they had some progress. They caused some investors to take haircuts. They got rid of some assets, but you still have, and get your head around these figures, people. And there's a reason why I want to close with this. You have, and I want to go back and look at this and make sure I get the number exactly right. When Evergrande was halted this last Monday, its equity valuation in the markets was $275 million. Their remaining debts that have not been canceled or somehow negotiated away are $328 billion.
Oh.
Folks, this is several times the Lehman bankruptcy in 2008. Now it's going to be a slow motion unraveling going forward. And there is some pretty weird stuff that's going to be revealed in the coming weeks and months about how judicially in Hong Kong, when all the assets are in mainland China by and large, you're going to be able to dispose of things, number one. Number two, the overwhelming majority of this 328 billion in debt is held by Western investors, a lot of them US. What happens if it's not looking very good to get much of this money back? What is that going to do to lending abilities here in the US? We've already seen another bank, New York Commercial Bank, this week in major trouble because of the commercial loan unraveling. Multiply that by 10, and this is what Evergrande is going to be perhaps for several years to come. You're looking at trade implications. You're looking at whether China continues, if they're lucky, toward a Japan-like scenario. And don't forget, when Japan had massive, ridiculous valuations and bubbles of everything that peaked in 1989 with the stock market in that country, a couple or 3 years later peaked with the ridiculous real estate valuations there. To this day, they have not got back to those levels. And it's so a new term, Japanification, has been introduced into the lexicon. When you get an economic bloc or country so laden with debt, so unserviceable, that you just exist. You limp forward trying to back and fill and paper things over, and you can't grow an economy under those circumstances. That's where China's at. So there are geopolitical implications. There's a what if China says get lost to Western investors. What is the trade retaliation? How do commodities play in this? We've already had threats from China to withhold technologies on rare earth elements, to withhold graphite, other kinds of things that we have desperate need of in this country, because, you know, as we said on our EV video the other day, years ago, this country made the ridiculous decision, which now we're paying for, to not only outsource, you know, electronics and sneakers and t-shirts to be made in other countries, but all the building blocks we need for the green economy. Okay, so there are so many implications here, and I'm bringing this up because if things unravel with that, you're looking at least for a while, a lot of downward pressure on all markets, and then it's not going to matter what you've got, because investors aren't going to want to buy anything. All right, and you're going to have to figure out, folks, how you're going to exist through this kind of a thing. Long term, the great stagflation is going to be our lot in life. That is going to favor broadly, for a lot of different reasons that we'll get into in the future. One of these, it's going to broadly favor commodities of all kinds, because that's where the next big growth wave is going to be, because it's happened every place else but that, and those are the things we need the most. But I'm telling you that from here to there, if you thought 2023 was a funk, and I'm not wishing this on anybody, but it's getting to be my base case, that we're going to have some angst to go through and a couple of major market upheavals globally to go through before we get to the relative ease of the great stagflation, which will favor value stocks, will favor story stocks, for reasons that we'll go into in another one of these. But for the time being, folks, whatever you got out there that you're trying to get individual investors back into, realize that the hill, if anything, compared to last year, has gotten steeper. And you need to have a game plan that is 2024, not one that's dated and irrelevant now.
Okay, so before I go and hang myself from my upstairs balcony, what do we do? What can companies do?
What companies can do is to make themselves relevant to people and explain things just in a way that you and I have been discussing. Okay. We need these types of commodities for the future, for our infrastructure needs, for our energy needs, for our green energy needs, all the rest of these kind of things. We need all manner of things. We need new inventions that help us save energy in our homes. We need new technologies to help make life better and easier and more productive and cheaper. We need new breakthroughs in biotech and medical technology and so forth. So these things are going to go on no matter what happens in the world. But the macro environment, if it's still against you, or the mentality as it is on Wall Street is still that you get short shrift because everybody's chasing the big easy plays in the big tech stocks and so forth, you got work to do, and you've got to figure out ways today to get your foot in the door. And even if it's going to be some pain between here and pay dirt, get people to understand why, even in an environment where they're not going to automatically do it, how do we put ourselves in front of them? How do we get through their door politely, when
Right.
they're certainly not running to break ours down. Let me leave you with this one last statistic, because it is not all doom and gloom. This is actually a time that wise investors are looking for long-term stories, seeing the handwriting on the wall, as I've been describing it to people. But I had the honor and pleasure early in my career of meeting some of the true legends in investing. I mentioned Sir John Templeton earlier. I got to meet him once upon a time. Peter Lynch, that used to run the Fidelity Magellan Fund. Before any of them, Philip Correa, who was the founder of the initial Pioneer Fund, who founded that mutual fund in 1924. One of the first mutual funds, they called them unit trusts at that time, of its kind back in the day. He and Putnam were the pioneers in starting the mutual fund industry. And in their literature, Pioneer always talked about what was, they wanted to give people tutorials on stock picking. And the statistic that he used to love to share, which I have shared countless times since then, thanks to him, was that if you look at the single worst time ever in history to buy individual stocks or the stock market generally, what was it? It was right before the crash in 1929 and then the resulting depression. So there was no S&P 500 back then. It didn't come around until the 1950s, and the NASDAQ later. But back then you still had the New York Stock Exchange, which was the main barometer, pretty much the only one that people used to judge the health of the overall stock market. From top to bottom, from September of 1929 until April of 1932, when it bottomed, the Dow Jones average declined by 89% in value. Okay. And you had people not only hanging themselves from their balcony, but jumping out of windows. Okay.
Right.
One out of three, this is the takeaway. 1 out of 3 publicly traded companies were higher during that same time that the Dow Industrials dropped by 89%. Why? They were unique. They had a story. They had a new invention. Home state mining was one of them, because people wanted gold, in those days. They had a new technology. They did stuff better than their peers. They had products that you couldn't do without. Okay, all a number of different reasons. And I truly see that same scenario coming again, not an 89% drop in the markets, but the great stagflation, which is going to hit corporate earnings. It's going to make it less attractive to just close your eyes and throw money at, quote, the market, the broad market. People are going to be forced by what's coming, and we're seeing the initial signs of this. They're going to be forced to be investors again. And that is when a lot of the companies that we talk to will finally start getting some recognition, if they can survive between here and there. And that's what we're here to do, to help them survive, help them get their foot in the door in the public imagination with individuals and so forth, until we get to that place where the market more broadly comes around to realizing that they should have been looking at them all along.
I love that. I love that. And one thing that you had mentioned about investor relations and public relations and media relations and all this kind of stuff, that's all great. But we bring about the relationships. The relationships is what we solidify with your cohorts, your team, your industry, the microeconomy, the macroeconomy, your investors. It's the relationships. And once you solidify those relationships, that's what's going to make it happen. Because it's no longer throw a whole pot of spaghetti at the wall and see what sticks. It's different now, to your point. And so take this stuff seriously, guys. It's important. It's important to you. It's important for what you bring to the world. And that's what makes it different. So Chris, thank you so much. Now, guys, you need to click that link below to see exactly why and how we do things. Give us a call, reach out to us directly. Let's have a conversation to see if we're a good fit. You've got 100+ years of experience with people who really care about the companies and the investors and what's really going on, because we've seen it all of our lives. So Chris, thank you so much for being such a big part of strategic media.
And to you as well.
Thank you.
We hope you got a lot out of today's subject. Make sure you avail yourself of the resources and contacts offered today. Subscribe to this channel for future topics and opportunities. And if you have any questions, drop us a line. Thanks for tuning in.